One of the most valuable lessons I've learned over the past decade in real estate is how essential it is to learn from the industry professionals. That's why I'm gathering professionals from across the country to share their experiences with you. This is a Gregerson's podcast, where experience and passion come together in the world of real estate. I'm Casey Gregerson, your host, and I'm very excited you're tuning into today's episode. As always, if you have questions for me or any of our guests, please reach out to me at casey@gregersonproperties.com. Now let's get started with today's podcast. All right, welcome to the Gregerson's podcast, guys. Excited to talk some creative finance today with you guys. All things creative finance, talk about the Montana market with one of the best in the business, Brandon Vezzoso. So Brandon, I met at Collective Genius. We've had a couple guests now on from Collective Genius. Yeah, guys, this is going to be exciting one. I'm going to let Brandon tell you a little bit about his background today. But yeah, if you're into creative finance, into the Wyoming, Montana, the kind of Pacific Northwest markets, actually Brandon's all over the place now. You guys are going to love this. And then at the end, we're going to talk a little bit about private money and kind of how Brandon works with different lenders and creates win-wins. But Brandon, tell us a little bit about your background. How'd you get to where you're at today?
Yeah. So my background is, before I got into real estate, I discovered investing in general probably about 5 years ago. I was working in the oil field. Once the oil field died down, ended up moving back to Idaho, and I was essentially in heavy equipment for 12, 15 hours a day. Discovered investing, kind of turned that into a classroom, if you will. A lot of podcasts, books, I could listen to those type of things for, again, 12, 15 hours a day. So I started just absorbing that like a sponge. I originally discovered bigger pockets and realized, man, if I do this conventionally or, traditionally, I might be able to buy a home every 10 years or so. If I saved up the $500, I get to keep it at the end of every month. So, that led me down the road of wholesaling. So I started really diving into that after 6 to 12 months of learning investing. Found somebody locally in my market, which is also in Collective Genius, Ryan Weimer. He was kind of getting his business started. So went and joined his team in acquisition, started learning the ropes, learning the business, the ins and outs. And that was huge, huge in my journey, just kind of shortened the learning curve, got to learn the business in and out, got a few deals under my belt and quit my W-2, I believe in the fall of 2020 is where I kind of just jumped in. I had a couple of deals in the pipeline that were, $5,000-$10,000 deals, which to me was a couple months of working, W-2. So once I had that proof of concept, I just kind of took the leap and became obsessed with it. From there, we got to the point where over a year we built up to doing around 10 deals per month. And then I started to, decide to venture on my own. And during that process, I kept learning, kept educating myself and realized that there was this thing called creative finance, where it gave you a ton of leverage. You could kind of make your own terms rather than going to the bank and putting 20% down as an investor. You could go and sometimes put $0 down or $5,000 down, whatever you could negotiate, with that seller. So, over the course of time, there's probably 8 to 10 different creative strategies that we learn now, but our company name is Creative Home Solutions. So we pride ourselves in giving sellers all of their options. So my wife's a realtor. We obviously offer, cash prices. We do some wholesaling, but I realized very quickly during wholesaling that wholesaling is great because you can make huge rips, but I also knew the tax advantages and the tax code I started learning, right, of real estate and the benefit of owning and holding real estate. So transitioned to that about 2 years ago, and we use a ton of creative finance to, I think right now I'm holding in my portfolio anywhere from 5 to 10 homes per month. And that's been powerful in just keeping some of that money because wholesaling is great, but it's very active. So I think just building up some of that passive income and taking advantage of the tax code that is really written around real estate was huge for us. So we really implement a lot of creative strategies in everything that we do. And to me, it's kind of the cheat code of real estate, in my opinion. It's allowed us to scale very quickly, allowed me to amass a pretty large portfolio in a very short period of time. So it's really been life-changing.
Oh man, a lot to unpack there, Brandon. Good stuff. But man, that's a good comprehensive part or summary of it. So first thing, back to the beginning, You mentioned you were in oil and gas. It's a selfish question. Where were you working before in oil and gas? What were you doing?
I worked all over, primarily in the oil fields of Utah, Colorado, but I, ventured out to North Dakota, Oklahoma. I was all over the place. So definitely on the manual labor, side of things. We were loading up had my CDL. So we were loading up, these pads and these pump units, and I would just go and take a giant sledgehammer and go giant wrenches and go put those things together and assemble those. So very, very manual labor.
Interesting. So more on the production side, sounds like, of oil and gas.
Exactly. Yeah.
Got it. Cool. Well, anyway, a lot of our listeners are oil and gas guys, so that's cool to make that connection. Cool. So and then you left the W-2. So I want to talk to the next step is like when you left the W-2 job, which again, a lot of other people might be in that same boat. I know I kind of lived that about a year and a half ago. But sounds like you were really smart, Brandon. You were working with one of the best already, learning all the hard lessons while you were working for somebody else, I would assume. But tell us a little bit more. You mentioned that you had a couple deals in the pipeline to where you have enough cash that you felt like you could go. But I want to just hear more about that decision when you knew it was right to jump off and do this full time, and how you knew like the proof of concept and there was enough money in the pipeline. And did you have, and was it just you and your wife at the time? Did you have any kids or?
We didn't have kids at the time. To your original question of when did we know the time was right? I don't think I ever would have taken the leap if things didn't work out the way that they did, right? I think I see that a lot where people are waiting for the right time to take the leap. And I don't know if there is a right time, so for me it was, and I don't recommend everyone do this, but I just had faith. I felt like God aligned things for me. I felt like it became a kind of an argument with my boss. And I realized, wait a second, I've been waiting and waiting to kind of stack up these wholesales to make this transition and quit my W-2. I'm being sent out of town for weeks or months at a time, staying in these cheap motels. I'm away from my family, away from the people that I love. And so for me, it was, now that I had that proof of concept, now that I knew, okay, I've got this money coming to me on these wholesales, I think if I could dedicate these 12 or 15 hours that I'm spending building someone else's legacy and building someone else's wealth, if I could dedicate that to doubling down in what I'm doing and seeing this proof of concept in, then I could really have a lot of success with it. So a lot of faith with it. I did not have a family. My wife was pregnant with our first daughter at the time. And so that's kind of an interesting story in itself, but we got a property at a wholesale price. So I remember it was $211,500. 6 months later, it appraised at almost 500, I think 495, right? So we bought it at a wholesale price with hard money with the intention of refinancing conventional. Well, I didn't really think when I had that conversation with my W-2 boss and I quit, how that would impact me being able to refinance. So my wife had to work at her bartending job. She's a stay-at-home mother now, but she was bartending at the time and had to work until she was, I think, 8 months pregnant so that we could get to that point of being able to refinance. So that was a pretty interesting journey. A lot of doubt, which I think most people have when they're trying to decide when to leave their W-2. So I think just taking that leap of faith was huge, but I don't want to overlook the fact that there were a lot of mindset issues and a lot of doubt, not just from myself, but people who love me along the way. Hey, are you sure you want to leave that job, that security, that comfort? What happens if the real estate market tanks? What happens? It came from a place of love, but there was a lot of doubt along the way.
Yeah, that's so good, man. You totally relate to like, I was in the same position, right? You're building it up, and eventually you're a mentor of mine told me, he's like, you're either gonna I forget what he said, you're either gonna just make so much that you can't stay there, or something's gonna trigger it. Sounds like kind of you. It's like sometimes your employer starts to force it to where you're like, you know what? Yeah, I've been working hard for this to get here. Why am I still dealing with this? Like, now it's better than ever. So love how you did that, and man, interesting too with your wife and kids, and how shoot, man. I get it. A lot of people don't, and that's why a lot of people keep their W-2 for so long, is for the financing piece. But man, that's cool. Well, let's dive into creative finance now, right? Yeah, that's crazy. Let's talk creative finance, right? We could go 100, man. Me and you could go for an hour on this, and I'd go for a couple hours just to pick your brain. Brandon's one of the best, but let's talk about maybe some of the recent. So, kind of talk about how you got into creative finance, and then like talk some deals with this, because I think a lot of people I talk to, they're just like, how is that possible? How do you negotiate that? And initially, before I started doing it, I'm like, why would anybody ever agree to no money down or agree to these terms, right? But I'd just love to hear how you kind of broke through that. And then, yeah, I'd love to hear some of the current deals, because you told me about some of them. They're phenomenal.
Yeah, so I think, I realized pretty quickly after wholesaling for a while that we are Really, we're not out there selling people. I always tell people we're kind of sifting and sorting people, sellers that we're talking to, right? There's some people that we can provide a solution to with a cash offer, and there are a lot of people that we cannot, provide that same solution for. So I think just running into, in order to get a really good wholesale deal, you're talking to a lot of people, right? You're talking to a lot of homeowners, trying to find a problem that we can solve. And so just realizing that, hey, there's a lot of these people that are just outside of that, out of that world where a cash offer close in 2 weeks is really going to solve their problem. Either they needed, they had a longer timeline, or they had just a unique situation, or they just wanted a number that wouldn't make sense. We weren't able to close that gap to allow us to solve the problem with that tool. So I just started learning, I kind of caught wind of certain people in this space that were buying things creatively, and was looking at the fact that, hey, a lot of times they can offer the seller a much higher price, if that seller was able to take payments on their equity over a period of time. And so I think the first one that I came across when I realized that, you can take over people's mortgages. There was a home here in Boise. The gentleman bought it for $600,000 in the peak of the market. And, Idaho, Montana are pretty similar. They've seen a ton of appreciation. The markets were very hot, especially during COVID, when a lot of influx was coming in here. And so the home was probably worth $550 when he bought it for $600K. Well, then we had a pretty huge market shift. And so the home, when he went to sell it, he got transferred. He bought it at a 3% rate. He got transferred, I think, to Indiana for work. And the home was worth now closer to $500K, and he overpaid at $600. So probably $515 or so. But, say he sold it at $515 and he goes and pays realtors and, closing costs and those types of things. He's selling for under $500K, and he owes much more than that on it, or he at least has more into that property. So for him, rather than writing a 6-figure check to go sell his home or lose, $100,000 plus, I was able to come in and give him $5,000 down, which may not seem like a lot. People say, why would anyone sell their home to you for $5,000 on a 600? That's less than 1% down. Well, it's really the net difference, right? Of having to write a check, for $100,000 to sell your home and receiving $5,000 is $105,000 difference to that net difference to that seller. So for me, I was able to go control an asset that was worth $600,000 for $5,000, which I think I recouped in year one. So it was a huge win for me. And it was also a huge win for that seller. I was able to close quickly on his timeline, take over those mortgage payments, and he was able to go move on, and transition over to Indiana and start his new job. So huge win for everyone.
Love it. We'll go to the next one. But before we do that, I get this one a lot, right? And I'm sure other people ask this question. Why? So the loan, to be clear on these deals, the loan stays in his name, right? You take over the payments. But, and I get this one a lot too, and I've asked Pace Morby some of the best this question, but what do you say when he says, well, hey, what keeps you from walking away? Like a year from now or 2 years, you go bankrupt in a couple of years. What keeps you from just walking away and handing it back to him? What do you say to that typically?
Well, if it's a rental property for me, typically the only people that really get hurt are the people who have to sell. Like he had to sell, right? If he would have held on to that property for 5 or 10 years, or say, rented it out, he didn't want to be a landlord. So, that wasn't an option for him, but the people who really get hurt are the people who have to sell. I don't ever have to sell a rental. As long as I'm cash flowing and knowing that, just the tax benefits of loan, of being able to buy a $5,000 asset. If I depreciate that asset, I can write off much more than $5,000 that year in taxes, first off. And second, I'll be able to cash flow on that, and that cash flow will increase over the course of time as rents go up, right? So one of my mentors actually has a saying that the equity comes and goes, but the cash will always flow, right? So my response to them, I would kind of guide them through that, show them the benefits to me, and show them that it would be silly for me to give back a cash flowing asset, right? It would be, well, what happens if the place gets trashed? Well, that's what we have insurance for, right? What happens if the tenant stops paying? Then I replace them with another tenant. And, we have property management, we have quarterly walkthroughs, we vet these tenants very well in the first place. And, for me, typically if a tenant moves out, even if I'm doing some minor repairs, I'm typically renting it out at a higher amount on the next tenant as, rents continue to go up. So if they have additional questions or concerns beyond that, we can go deeper into that, but usually just kind of letting them know first off what the benefits are to me and showing them them that, hey, this is not only a win for you, this is a win-win, which I think people always talk about in sales. Hey, let's make this a win-win. Very rarely do you see win-win situations in sales, right? At least in my opinion, from what I've seen. Creative finance is one of those things that truly allows you to create a win-win for that seller. And this is a great example of that.
Yeah, I agree. I mean, you looked at the delta of that guy. Like, nobody wants to write a $100K check. He got money out of it, and he could walk away and move on. So totally makes sense. Brandon, tell me about some of these commercial deals you're doing now, because these are the ones sometimes I think a lot of people too, they're like, why would anybody sell on those terms and give you such a good deal? So anyway, talk about some of your new ones and why it was such a win-win for the seller.
Yeah, so there's a commercial deal right now that we're purchasing in Texas, Dallas-Fort Worth area. That's a pretty amazing deal there. It's tax assessed at just shy, I think, 2.96 million. So basically $3 million. We're purchasing that for $800,000 with 10% down, taking over the underlying debt, the $4,500 a month payment that's on it, and the seller's carrying their equity, which I think is around $300,000 for the next 3 years with no payments, no interest. And really, again, it comes down to being able to solve a problem. So this seller in particular this is kind of like, think of a YMCA type facility. It was built as a school about 15, 20 years ago. There was a church that had this built as a school. And this seller runs a lot of nonprofits, foster care, those type of things. And so this was kind of like an activity center. It's got, I think, 15 offices, a really cool gym space, conference rooms, cafeteria, kitchen, all the whole nine. It's a 20,000 square foot building. And so she's now going into retirement. And, it was just something that, as the economy started to shift, she was kind of just spread thin. And so she thought that she would be able to really quickly find somebody she could sell this property to at, say, $1 million, $1.5 million pretty quickly. But as we know, the landscape has changed. And I think commercial's getting hit really hard right now, especially office space. And the rates are just super high right now in the commercial space. So she kind of offered it back to the church, which now the church is a totally different owner. And they wanted to buy it, but they couldn't get the lending at $2 million that was required because of interest rates. They just couldn't qualify. So then she started she rents the gym out to some trainers, some basketball trainers, some, people who rent it out for different boxing events and things like that. And so she offered it to them, and they couldn't get qualified. Well, during this time, she had already moved her whole foster care system out of there. The people that were renting the offices were out of there. And, a commercial closing is typically not a fast process. There's a due diligence period, there's a closing time. And so by the time the first church found out they couldn't get funding on it had been over 60 days and she wasn't able to cover that payment. And then she went with the new buyer, ran through the process there. So by the time I met her a couple of weeks ago, she was 4 months behind on those payments. So looking at a foreclosure, right? And so a broker told her, oh, I can sell it in a heartbeat at 1.5 to 1.2. Let me list that for 30 days. She went through that process. The broker just put a sign in the yard a week and a half ago after it being up for 30 to 60 days. Didn't even list it on LoopNet. It was just listed on like your Zillow and Realtor.com and things like that, which not a lot of commercial buyers are looking. So I was connected with her. Somebody told her, hey, I've got somebody who I think can solve this problem for you. Went in and she said, hey, I'll take 600 cash for it right now. I owe 500 on it. I'll take 600 cash today. And I said, well, I might be able to do 600 cash, but what if I could put potentially another couple $100,000 in your pocket by making payments to you over the course of time? So we structured those terms. I'm giving her less than 10% down, taking over those mortgage payments immediately, which is a huge weight off of her shoulder. And out of that 10% down, the $30,000 in arrears that she's behind on payments are coming out of that. So I'm catching up the mortgage, taking over a 5% commercial loan, which is half of what you would get today if you went to the bank. And, and I have no payments on the equity. So a place that would rent out for $15,000, $20,000 a month, I now have a $4,500 mortgage payment on it. And again, over $2 million below tax assessed value, which is pretty powerful.
Man, that's so cool. So you answered a couple things I was going to ask is the lead source. So you found it from somebody else. You're in Montana, right? Or you're in Idaho, but invest all over.
I'm in Idaho.
Yeah, you're in Idaho.
Yep.
But was this from like a sub-2 student or who brought this deal to you?
To be honest, I don't know. It was brought to my team, and one of my lead managers brought it to me and said, "Hey, this is a super unique property. I'm not really sure how to comp it or how to deal with it, but she's in distress, and if we can solve a problem for her, I'd really like to. A really good lady. She's done a lot of amazing things for the community. If there's a way, she's looking at a potential foreclosure here pretty soon, and she's going to lose all of her equity. So if there's a problem we can solve, let's do it." So hopped on a call with her. It sounds like we're going to be able. She's got great connections there. Sounds like we're going to be able to do some pretty cool things with that facility. And to me, that's what it's all about, right? Like the money is a byproduct of being able to go solve problems for someone. And I think people kind of get that twisted and put their agenda first on, hey, how can I make my solution work for this person? I think really active listening, making the seller feel understood, builds that kind of trust that allows you to get life-changing terms like we got on this property.
Yeah. Oh man, I love it, Brandon. Love it. Cool, man. Well, like I said, we could go that for a while, but let's talk about like the Montana market. So we both kind of shared playing that market. I'm curious. You mentioned you've seen a lot of appreciation. What are you kind of seeing there lately, and what are you excited about kind of heading into 2024 and beyond?
Yeah, I think obviously there was a ton of appreciation in the market over the last several years. What I see in Idaho and Montana especially are I don't think wages and rents have been able to keep up with the appreciation naturally, right? Usually wages and rents are going up once a year, whereas appreciation has just been skyrocketing. So it created a pretty unhealthy market, I think, there for a while, and then it led to kind of a broken housing market. I've seen other Midwest markets that haven't been impacted as much, but when you have a price point like that and the Fed kept interest rates so low for so long that I think they kind of ended up breaking housing in a sense, right? Where to me, a broken housing market is no supply, no demand. Typically in other real estate recessions that we've seen in the past, historically, anytime that there's no demand, the supply is increasing substantially. Whereas, what we've seen over the last, I don't know, year and a half in Idaho and Montana is, yes, the demand went away, but the supply is not really increasing. And I think a huge part of that is people don't want to give up their 3% rates to, the move up buyer, which is 20 to 30% of transactions. The move up buyer doesn't want to give up their 3% rate. Say they had a couple of kids and they just had another one and they want to upgrade from a 3 to a 4-bedroom home. They're not willing to go double or triple their payment to go get another bedroom. So they're like, no, I'm going to hold tight. Combine that with the fact that builders have really scaled back on building, and flippers haven't been flipping. There's just not a lot of inventory there. So we did take a pretty big hit in Montana, I think, and there hasn't been a ton of demand. But I don't know about you. We haven't really talked about this in depth, but I'm starting to see a lot of that demand come back now that interest rates are starting to drop, and people's most recent memory is 8% mortgages rather than remembering the 3% and the rise to that. Consumers want to feel like they're getting a deal, right? In general, real estate or otherwise. So I'm starting to see just in mortgage applications, in homes that we're selling, either on novation flips, that we went from homes sitting for 6 months. And then all of a sudden this winter, as they started dropping rates, we're getting multiple offers on homes again. So I think I'm just seeing things really start to pick up and demand starting to come back. We'll see what the Fed continues to do with rates, but I don't think the supply ever got to where we needed it to get to be in a healthy market. So I think as rates continue to drop, there's going to be a huge demand moving forward. What are your thoughts?
Yeah, similar. It's like, you're right. And I was you probably saw it, right? Over the last 6 months, at least I started to see it with the people I was pitching creative finance to, or pitching terms, or just pitching cash offers. Like it wasn't landing well. And as you said, you got to talk to a lot of people to find a true wholesale deal that wants to sell that and needs to sell in 2 weeks, right? But I was starting to finally see that because nothing was selling. Because again, for the last 3 or 4 years, these people they could just go list it on the market as is and get a bunch of offers, even if it needed all these repairs, right? But that shifted, especially over the last 6 months. And I don't know, I kind of selfishly, I was finally starting to get a groove in that, to where, all right, now we've got some motivated people. We're starting to feel like we've kind of understand the new market. And then now, right, now let's go. But now, again, we're starting to see it come up, which is great when we're flipping. We're like, all right, now our flips that we got in the pipeline should do even better. But we might be back to where when we're talking to them as a cash offer or something, they don't need us because they can just go list it on the market as is, and somebody will go for the ridiculous offer because there's no inventory,
Yeah, I agree. I think there's pros and cons to each market. In 2021, it was really hard to find a deal, say wholesaling, really hard to find a deal, really easy to dispo or find a buyer for that deal. What we've seen over the last year and a half has been kind of the opposite, where it's really easy to find a deal. And when I say really easy, it's just relative to that prior market, but really easy to find a deal, but not easy to find a buyer. Many buyers out there. So I realize the benefits of both markets. And I think just being nimble and being in it as much as we are, and talking and seeing what's going on in the market has been huge for us. And, we really pride ourselves on really being able just to be nimble, right? And being able to adapt to whatever the market is. And I think, creative finance is great, but it is just a tool, right? It's, you pull that tool out when it's the right time. And I do think that honestly, there are going to be more problems to solve with creative finance, even if the market does go crazy again, than there were in 2020, 2021, because mortgage rates, for example, 3%, you couldn't take over a mortgage really in 2020, 2021, because they were just being originated then at that point, right? Whereas now there's people who bought in the peak of the market, 2021, home prices in most cases in Idaho and Montana, they're still below where they bought in 2021 or really close to. Mm-hmm. So I still think there's an opportunity now that we can go take over some 3% debt on people who just want a higher price or who don't want to write a check to sell their home, whereas that wasn't really an option in 2020 and 2021. So I'm excited. I mean, regardless of what happens, I think if we can be nimble and adapt, there's going to be a lot of problems to solve, because even though we've kind of gone through the majority, an average real estate recession is 18 months, and we just went through about 18 months, right? But I think economically, I don't think we're through the pain. It looks like we're kind of going through a rolling recession. And so I think even though we may be through the housing recession, there's still going to be a lot of pain and a lot of problems to be solved through the economic recession that I see that we're going through and what's upcoming.
That's a really good point, man. Well, that what you said, one thing I'm going to segue into our next one, which is really good about like being nimble. And we talked about in that market when there's not a bunch of buyers and we're finding really good deals, right? So I've been feeling that like you say, for 6 months. It looks like that might get better, which I think parlays in it's even better. And it's moving into private money. So when it's, to me, at least in our opinion, I want to see if you agree, when it's a market where it's essentially a buyer's market, it's easier for us to find deals, but for us and it's a great time to pick up rentals, right? It's a great time to go build up your portfolio, right? But that becomes very capital intensive. So I'm curious how I'm assuming you've probably ramped up some of your private money relationships and brought in more people to where you're like, hey, guys, now's a good window because we're able to buy at a discount. And if they drop interest rates, all our assets are going to be worth that much more. So let's talk a little bit about private money. Have you been seeing that?
With private money, started out with family members, friends. Hey, I need, $20,000, $30,000 to go fund this really good deal. I can pay you X% on it and you'll be secured by the asset. That slowly turned into, that one or two people started telling one or two people, hey, you're only making 5-6% in the stock market. I have a guy over here who will pay a higher rate than that, or at least that, and you're actually secured by an asset, right? And so I think that's pretty powerful, just looking at the stock market, especially when planning for retirement, right? I see a lot of people who became private lenders for me that are planning on retiring in the next few years, and being dependent on the stock market and where the stock market is while planning your retirement can be pretty chaotic, right? Because there's so many factors. If all your money's in Tesla and Tesla goes down to $12, well, we all know it'll come back to be higher than what it is today. But how long will that take? And if you plan on retiring next year, well, then what are your options, right? You can't just go liquidate that asset like you could, if you were to lend on real estate. And the big thing is you can't plan for down the road. Like, my lenders understand that if I'm paying them 8% or 10%, whatever the case is, they know that they can plan on making that return. That second, that they'll be secured, but third, that I know I'll be making this amount for the next 3 years, and I can go compound that, look at what the numbers will be in 3 years from now. Whereas that's not something that they could do when they were investing in the stock market. So I think with private lending, I think, we went from, hey, can we borrow $20,000-$30,000 for that deal, to a couple years later, I mean, there's millions of dollars now that I'm responsible for managing and trying to keep active on deals And I think a huge part of that is understanding that these are large sums of money. These are people's retirements. And this isn't something that you should really jump into without knowing how to manage other people's money, without knowing that this deal is, you don't want to bring a private lender into a mediocre deal, right? You want to make sure that if they're lending on that there's a huge return, that you can pay them on time every time, because you're creating a long-term working relationship. And regardless of if you handle that relationship good or bad, that word is going to travel fast. So I think just going in with that understanding of, hey, don't try to make a deal, go find really good deals that are no-brainers, that either have a huge profit on the short term, or that you can easily pay that lender out on a monthly basis out of your cash flow of the property, with the understanding that, hey, if this whole deal went sideways and for whatever reason your numbers were wrong, that you're comfortable coming out of pocket to pay that private lender back, right? Which I see a lot of people trying to raise money or try to go get private lending, that they either have a mediocre deal or trying to buy at retail, or they just don't have the means to repay that. So I think just building and maintaining those long-term working relationships, naturally people are going to tell people if they're having a good experience. And so we've been able to build to quite a few private lenders now, really just off of word of mouth and people watching what we're doing, seeing the kind of deal flow that we have, and them wanting to be a part of it.
Yeah, I love it, man. I love it. I haven't seen that. Not many people talk about the fact that, we talk about the great returns and all the benefits of real estate, the security, but not everybody talks about, and we like that it's not like this, right? Especially if you're debt, right? But good point to the stock market, to where if you're, it's probably a good niche you're finding is people who are, they're looking to potentially retire and they don't want to have to, like you said, their stock portfolio cuts in half and it's time to retire, versus if you're investing in real estate, which it can fluctuate, right? But ultimately you're probably got a mix of buy and hold stuff, or you're flipping stuff that you could have the market correct 20% and you could still pay people back.
And it really only changes on our end, right? As the investor, because regardless of what the market does or what the equity does, that's coming out of my pocket. My lenders are getting paid the same, whether the market's here or it's down here. So that's important, I think, for them. And I don't think really people understand that. I always recommend that people be diversified, but I have had lenders, about a year ago, I got a call from one of my lenders who was in tears. They were building their dream home, planning on retirement that next year. And she said, Brandon, they had, maybe 10% of their overall retirement parked in, lending in real estate, but they had a lot of it in the stock market. And they took a hit that was almost $500,000. Right. They had millions of dollars, their whole retirement saved up. And they said that was our plan. That was our plan for retirement. So we have to decide now, do we want to stop building our dream home, or do we just want to work a couple more years in order to be able to retire? And again, that just speaks to the volatility of the stock market and not being able to rely on that consistent number that's coming in, that you can rely on compounding that as well.
Yeah, I loved every part about it. And the last thing I want to highlight that you said is even it doesn't, like, if you're a private money lender and you're truly investing as a debt partner, it doesn't matter what happens if it goes up and down. And it's two different investments, right? If you're going to be doing equity and in a fund or in some sort of equity part, right, you get to take the risk that we're taking, and you get to keep all the upside, but you take the risk, right? But when it's debt, you're fixed there. And as you said, if things go sideways, we got to pay it off of another project, right? Where we got to cover it, because we're going to cover. That's the commitment when you do debt. So I love it, because I don't think everybody treats it like that. So it's pretty cool.
To me, this whole industry, whether it's private lenders, whether it's contractors, whether it's, I hear people having really bad experiences all the time with contractors or with title companies or whatever the case is. And I think it all comes down to understanding that this is a long game. Right. And especially in the markets that we work in, it's a very small community. So regardless of if you operate with integrity, and you do things the right way, or if you don't do things the right way, that word is going to travel fast. So if you want to be successful long-term in this space, building, maintaining, and growing those relationships is everything. So that's always our main focus. Is I'm prepared in a worst case scenario to go write $100,000 check if things were to go sideways, where I don't think most people starting out looking for private lenders or trying to make a deal work are really thinking about those things, that hey, even if they're funding it themselves, that hey, if this project, my contractors open up the wall and find a bunch of black mold, or we find foundation issues, that I'm going to be in a good position. They're thinking about the upside and not thinking about potential downside. So I think that's really important, especially for newer investors.
Well, cool. Well, Brandon, tell me two more. Kind of preface this at the very beginning, but when you're working with new lenders, right? So let's say I get a lot of people that believe what we're saying, right? They believe they want to be in real estate. They believe in the returns. They love that they're secured by an asset, but it's just different. Maybe these people are used to just investing in the stock market, or and maybe it's just very new to them. It's just really hard for them to pull the trigger on that first deal and actually be a lender. And any lender I've ever worked with, once they complete a flip or they kind of get their first monthly, if you're doing monthly interest, whatever that looks like, once they start the checks coming in, they're like, yeah, they're excited, right? And they don't go back. But it's really that first step. And I'm just curious, any advice or kind of knowledge you could share with people that struggle with that, and maybe how you're able to walk them through to where they can make the plunge and really become a private money investor and invest passively into real estate.
Yeah, I think at least showing people, I think just making introductions to other people who have been lenders, right? Because I think the majority of those people were nervous to lend, were nervous to get into real estate, just because of the inherent risk of any type of investing. So I think, as long as those lenders are doing a good job of vetting who they're going to be lending to, having conversations, just like any, referral. I think it's really powerful to show that, oh, this lender actually had fear. They felt like they needed to know everything about real estate investing in order to become a lender. And some of them do. Some of my lenders have become partners, and they've learned through. That's the cool thing about this, right? Is a lot of them started off, they're like, well, I want to get into investing. I have this W-2. I don't have the time to go do what you do, Brandon. I don't have time to go listen to podcasts and books all day. And I can't learn through experience like you are. And now some of those people are partners with me on multifamily projects or, flips, things like that, because they were able to learn by the transaction. They were able to lend on a project, say it's a fix and flip, and learn throughout the process what some of this looks like, right? What does it look like to vet a title company? What does an escrow process look like? What are the instruments that I'm actually secured by, whether it be a note or a deed of trust? And you can show them that, look, you're protected in the same way a lender is, in the same way a bank is. Banks are the largest building in almost every town you go in for a reason, right? So there's obviously something to it. But then showing them, throughout the whole process, and some of them want to be more involved and more hands-on than others and may ask more questions. But just like I talked about in my time with Ryan, I was able to make money while learning, right? I was able to learn more by seeing all the intricacies, all the mechanics of a deal than I would have been otherwise trying to read it in a book or trying to learn everything before I took action. And I think it's the same way on the lending side. A lot of these lenders have become partners and didn't even plan on becoming partners. They're just seeing that, oh, this is actually really interesting. Oh, this is what goes into a fix and flip. Oh, this is what permitting process looks like. Or they might just see the kind of profits that are being made and want to be more active. And so I also have other lenders that just want to see a fixed return. They may be attorneys or, high earners that just want, hey, I just want to make more than I would in the stock market. I don't want to know anything about real estate. But I think it comes back to your original question. I think just showing them proof of concept, showing them that, hey, let me get you in touch with my servicing company that services all of these, and show you that the amount of money that these guys are making on a passive basis, right? And the fact that, again, when you can show them that, hey, you can project this whatever percent for the next 3, 4, 5 years and actually do the math, I think that comes with a lot of comfort. To me, the stock market, and I have a little bit of money in the stock market and Bitcoin and things like that, but it's not something I can plan for. I can tell you that, right? A lot of volatility there. So again, I think it just comes back to just showing them the upside, showing them that there are a lot of people doing this and here's the reason why. And a lot of times just making that connection with those lenders, and they realize like, oh, you're feeling the same things I felt, or that I'm feeling now at one point, and now you're addicted, and now your goal is to get more money and put it back into this and keep it working for you and compounding as much as possible. So
yeah, oh, that's gold, man. Really good answer. And then last one is kind of like the avatars you've seen for like these private money lenders. You mentioned one of them, like people getting ready for retirement pretty soon. They want some predictability. But what have you found that are really good kind of and anybody could be, but what in general, what do you find is a good avatar?
I think people, starting out in real estate, I had a mentor who told me initially that there's 4 ways that you can add value in this space, right? It's time, money, relationships, or experience. When I first started out, all I had was time, right? Now I have all 4, so I can add value to almost anyone in this space. But starting out, all I had was time. I didn't have money or relationships or experience. I think a great candidate for someone like this who may not have time, experience, or relationships, but they may have money, but is wanting to learn more about this, that's a great candidate, right? Because they don't have the time. It's a very passive way of them to learn a lot, and they can learn it by the deal. I think another great candidate would be anyone who, I've gone and spoke at like IRA type meetups, right? Where people don't understand that they can take their IRA or their 401k and convert that into a self-directed IRA and be able to lend in the same capacity. A lot of lenders have the misconception that, hey, I've got to take my W-2 income that's active, that's already been taxed, and go pour that into being a private lender. So it's actually super powerful to be able to take, whether it's a Roth IRA or any type of 401k, convert that to a self-directed and compound that over the course of time into real estate. That's another great candidate as well, as somebody who just has an IRA or a 401k of some kind. And then I think just anybody who's either approaching retirement or really wants to plan for retirement. Like I said, it just being able to predict that, being able to calculate that and actually show it on paper. What I've seen is people have a lot more comfort and they have a lot more confidence in setting out for their retirement goals, because otherwise people are just a lot of uncertainty. Well, I don't know, I might have to work until I'm 70. We'll see what happens. But when you can show on paper that if you continue to invest this much into your 401k, or your workplace may contribute to it, and you compound it and you keep pouring that in and compounding it, here's where you'll be in 6 years. That gives a lot of confidence and security in itself. So I think really anyone makes an ideal candidate, to be honest, once you can show them how. But I think that it comes back to most people think they need to be some type of expert in real estate. Whereas most people aren't experts in Tesla. They can't tell you how the factory works, how the product works, whatever the case is. They don't know the ins and outs of Coca-Cola or whatever stock they're investing in. They're just trusting that whoever's managing their account is placing that money in the right places, right? So I think that's what holds a lot of people back. And to kind of circle back to your initial question on, hey, when should you leave your W-2? And it's the same thing that holds people back. It's the fear of the unknown, the feeling that you need to be an expert in order to start. So I think we do a really good job of connecting people, letting them understand that, hey, we all start somewhere, but every investor wishes they started 10 years ago, right? So our goal is to try to get them to get their money working for them as quickly as possible so that they can get to their goal as quickly as possible.
Awesome, man. Good insights today, Brandon. It was cool. We covered it all from leaving your job, which you just highlighted again, to doing the creative finance, to the Montana market, and then wrapping up private money, which I think is one of the things you do all those things well, but one of the things you do best. So, man, Brandon, where can people find you? I know you're starting to put out more content and stuff like that. Where can people connect with you at?
Yeah. So, I have my Instagram handle is @Brandon Vezzoso. We may have to kind of spell that out. That's a hard one, but that's Brandon Vezzoso. You can find me same place on Facebook, Brandon Vezzoso. We're working on launching a YouTube channel here soon, and we've got some podcasts recorded, and those should be launching here in the next couple of weeks as well. So find me on social media. We'll keep you updated on anything that's coming out. We'll be launching those here in the coming weeks. And if you have any questions, creative finance related, real estate related, business related, feel free to reach out to me on those channels. And, I love being able to answer questions and help people just get the ball rolling. That's how I got started, is people pouring into me. And so, I'd love to return the favor. So if anyone has any questions, feel free to reach out to me.
Thank you so much, Brandon. And he means it, guys. He's been really helpful for me. I love picking Brandon's brain. He's done so much volume in creative finance, and we do a lot as well, but Brandon's seen so many different situations. So really, really good guy to pick his brain. And as he said, he's very willing. So Brandon, thanks for sharing a ton today. And yeah, we look forward to hearing what you guys and your team put together in the next year. You guys keep crushing it out there.
Thanks, Casey.
You bet.
As you may have learned by tuning into this episode of Gregor Sense, the easiest way to make real estate investing hard is by going at it alone. So as you continue learning and seeking knowledge of the industry, I want to encourage you to build relationships with other professionals who are passionate about real estate. Whether that's an agent, a business owner, or a managing investor like myself, there are pros that want to see you succeed and are willing to help you by sharing their experience. You can always reach me by visiting caseygregerson.com and scheduling a call. I look forward to connecting with you and continuing to share my experience with you here on Gregersense Mobile. Until next time, I'm Casey Gregerson. Thanks for tuning in.